Hello everyone, good morning and welcome to today's Trading the Markets Live, and we're trading the European Open. So today now is Tuesday the 4th of September, and what we look to do during this session is to look through the markets in a fairly consistent manner to identify high probability trading opportunities that we will then go through a bit of a process in terms of our ability to execute trades consistently and with discipline. And then we go through a phase once we're in that trade to manage that trade effectively, where we look to mitigate risk That's kind of a priority, and then we'll look to let those winners run. So our approach is very much based on cutting our losers short, letting our winners run, and that's what we'll practice over the course of the session. So hopefully we'll get some good opportunities today, all with one reason, and that is to book in consistent returns when we trade these financial markets. So without further ado then, if I could draw your attention to our risk warning, please do take a moment to familiarize yourselves with the risks involved in trading these financial markets, and of course take note of the risks currently up on screen. Okay, so before we get into trading the financial markets, it's important that we have a little understanding in terms of the fundamental events and looking at the news flow. So what we'll do is we'll bring up Forex Factory. So bring that currently up on screen, and today is obviously Tuesday the 4th. Now we did have an RBA statement and a cash rate decision as well, and it was forecast for that to remain at 1.5, and that's exactly what we saw. So sort of steady as she goes effectively in Australia. There is sort of global growth. They are identifying potential sort of financial risks, but no need to obviously change interest rates as a result. So if an interest rate increase is unexpected, we're likely to see the Aussie dollar increase in value, and if it decreases unexpectedly, then we'd be very likely to see the Aussie dollar devalue quite considerably. And we'll have a look at the Aussie dollar now very shortly. We do have the governor of the central bank, Philip Lowe, due to speak at the RBA board dinner in Perth. So it's an after dinner speech. More importantly, we do have the inflation report hearings impacting the British pound. Obviously inflation is on the rise in the UK, so we'll get a little bit more information about that, and that's at 1:15, so likely to be a volatile period for the pound, the British pound. And the only other major news event we have for the rest of the afternoon is ISM manufacturing number. So it's expected to be a significant number, 57.6, where excuse me, that's the wrong one. Let me click this one here. So, you know, the manufacturing has been accelerating now since, as you can see, down in 2016. So staying above the 50 is quite an important figure, because it just it alludes to the fact that the manufacturing base in the US is on the increase, which is obviously a good thing for an economy. So so that's really what we got to concern ourselves with. So we are sort of obviously past the 8 o'clock mark. There is some European and British pound data, not likely to impact the markets to any major extent. And the Aussie dollar, it's an after dinner speech, unlikely to shake markets, but I suppose that's why it's regarded as a significant event, because any time a central banker speaks, the market listens very carefully to see if there's any clues with regards to their approach to interest rates, and so therefore can be volatile, but we wouldn't really expect it to be, if that makes sense. And so we will really prepare ourselves for a bit of pound news and dollar news this afternoon. So as you can see, not an awful lot to contend with. Now, on the trading front, we've got some interesting opportunities. So the first one is the potential for the dollar to strengthen, and we spoke about it yesterday. Although yesterday was certainly in the morning was a little bit active, but then the afternoon completely died. Obviously because it was a Labor Day in the US and Canada. So we're seeing this market push to the downside and just roll over, as you can see. So now we're beneath the weekly low. So when we look at the weekly time frame, what we'd do is we'd expect continuation from this long rejection candlestick, and that's what we'd be looking to trade the rejection. And yesterday was a bit of bullish price action, which has now kind of rolled over. So this is definitely a primed target to look for opportunities to sell this market. We've got a nice long run up. We've broken the weekly low to 1584, and if we get a nice pullback to that level, it might give us a great opportunity to get into it. So we'll come back to that very shortly. Same situation, expecting continuation below the 28.53, and that's the current price as things stand. So we've broken below it and we've pulled back a little bit. So we can expect continuation to the downside in the pound dollar as well. So as we flick through the rest of the charts, we're seeing a bit of dollar strength just bouncing off these lows and coming into the dollar yen. Same situation, dollar Swiss. We're able to book in profit now this morning with our dollar Swiss trade. So we're able to capitalize on a nice little move to the downside over the course of last week. And we get some indecision, of course we do. And now we're beginning to get the pullback. So a bit of strength coming back into the US dollar, as you can see. The dollar CAD breaking above this level. This level can provide a little bit of resistance, so we want to see if we clearly break away from it. But what we'd be looking at with a market like this would again be the high probability trade, which for us is, from a price action perspective, is to see if we get a little bit of a pullback on it, which creates a bit of a structure, and then if we get a break of the high, to look to get into it. And adopting that kind of approach prevents you from buying the highs, which carries its own risk. Of course, you can get into these markets at this stage, but we're running into resistance. So now with a market like this, really patience is the key. Wait for that pullback, wait for the structural failure, because at the moment we're just bouncing off the lows under 128.87. So it's a significant bounce. It's a 300 pip bounce, so it's a really large bounce to the upside. In fact, probably 200 odd pips to the upside. So, but we've only had 4 days of pullback, so that is by no means conclusive that this market is just going to continue to rally. So what we'd like to see from a price action perspective is this market pull back and then for it to extend to the upside. So so this is what we're looking at as far as the dollar CAD's concerned. So this is the price action that we've seen since the rate impact. So let's have a look at it. So as you can see, we initially had a little bit of sort of bullish price action come into the Aussie, and now we've completely sort of unwound that initial move. So a little bit of choppy, a little bit of indecision there. So when we look at it on the daily time frame, do we expect this market to continue lower? Yes, we do. We're kind of looking very closely at the 71.77, which for us is a very important level. It's the weekly low, and we'll see if we can break this low and we get some continuation to the downside. So for now, we're just quite happy to just stand off just a little bit. Same for the New Zealand dollar. We've extended lower. The trade was back up here last week, which is the 66.84, and we are now sort of running down to the 65.56. So a nice strong move over the last 4 trading days. Yesterday, not an awful lot happening in terms of range, and in actual fact, if we look at the range, the 66.06 and the 65.75, so we've only got a 31 pip range even today. So again, you know, what would be your expectation if you got into a market like this? It would be fairly limited. Okay, that's the New Zealand dollar. So moving on to the euro pound. We're just sort of coming off these highs, really. The 90.37 is a significant level, and it has been on a number of occasions in and around this little band in here, can provide a lot of resistance. So really, with all of the tailwinds with regards to Brexit negotiations and the Chequer deal and the revolt by Parliament effectively, and the potential for another referendum and another election and all that kind of stuff, it's just really, really turbulent. So really, we want to exercise a little bit of caution, perhaps, with this particular market. So euro pound. Euro dollar, euro yen. Let me get this right, euro yen. So we do like the idea, like we've seen in the euro dollar, is this market just rolling over to the downside. Not quite seeing it as you can tell. Same situation for the pound yen. We would expect to see continuation, but we're seeing the dollar be really strong against the yen today, and we're getting a little bit of a bounce off these lows, 142.79. So we really want to identify a good opportunity if we do get a rollover to the downside for this price action to continue lower, but obviously not at this stage. Another market we'd like to look at carefully is the gold market. We're just hanging around these lows, so we've now made a new low, which is exactly what we want to see. We're below the weekly level of the 1196. The low is now 1193. So there's the expectation that we're likely to see a little bit of a push lower. So this market is one that's worth looking at for us. US oil, crude oil WTI. We do have this level up here, the 70.83 level. So we'd like to see this market create a bit of a structure for us so we can trade it effectively. At the moment, it just seems to be continually driving higher. The S&P 500 looking potentially threatening, like it's going to break to the upside. It's looking like that across these markets, and the Nasdaq is currently at its all-time highs right now. So a break above that. The only problem with that is you are trading the all-time high in the Nasdaq, so that comes with its own risk warning. However, you know, the market is pretty incredible. It keeps making these new highs time after time after time. So traditionally, trading an all-time high and all-time low would be a little bit tricky, and traders would be a little bit apprehensive because the volume at these levels are very, very low, and the chance for a rejection is very, very high. I suppose that's what makes trading these all-time highs quite difficult. But obviously hindsight can make that approach sound and look a little bit silly, and that's just really what these markets are making traders feel is relatively silly, because they're just fraught, but they keep grinding higher. So really difficult, really choppy. A little bit of strength coming back into the FTSE 100, probably off the back of a little bit of weakness in the pound. Again, nothing really to work with as such just right now. We're getting a bit of bullish price action coming into the pound. Now we're seeing the dollar Swiss. We're seeing that strengthen, so we might see a little bit of weakness creep in for a short term before the next move potentially. Aussie New Zealand, looking at this level being a floor. Yesterday's candle was particularly it's kind of a bullish engulfing, isn't it? But the range was quite significant, and we're seeing continuation to the upside today. So a viable opportunity there. So let's go back to our trade plan then. So the markets we're going to look at for the session, without doubt, would be the gold market. So what we'll do is we'll divide the screen into three today. There's three good markets for us to look at. They're all correlated in terms of being dollar pairs. So we'll stick this one in the middle, and we'll keep an eye on these closely, and then we shall put the euro just on the left hand side of the screen. So this is effectively our trade plan for the session, and we'll go into each of these now, and we'll plan our move effectively. So let's start with the euro dollar then. So when we look at the weekly, when we look at the daily, we expect this market to continue lower, and that's really what we're trading. We do have a bit of support down here, as you can see, around the 15.43. So it could give us the best part of 30 to 40 pip move before we'd need to make a serious decision on it. So let's go into this market. On a 15-minute time frame, you can see the little bit of a pullback there. We'll scale right in and just see what's really going on with this market. Just a really strong move lower. Let me. So there's a couple of levels to just pick out effectively. We can have a look at this low in here. So this is like a firm kind of range really that has previously supported price and has facilitated a breakthrough. But of course we have our weekly low, which is the 1584. So those of you that are able to access and join our weekly trade plan will see that we're looking for opportunities. If we get breaks of these weekly levels, they can give us good opportunities. They reinforce some trade ideas effectively is what we'd be looking for. The euro dollar getting a nice strong bounce back off the low, so we'll take a note of this low and we can actually go in and see if we get an opportunity on a daily time frame in this market. So a level that I would initially like to look at, if we get a break beneath this level, then what this market would do would represent a bit of a pullback and a structural failure to the downside. So this level in here could be a good opportunity for us, but let's see if it continues to pull back to these levels. That will be the first port of call, and let's see if it breaks through this, do we get a pullback to these levels. So we're just monitoring these highs very closely. So now we're getting a bit of a considered pullback in this market. So we'll continue to focus on price action. So let's continue to look at this. We've got a good understanding now, hopefully. Getting a bit of sort of dollar weakness. So now we're just really up to these levels again. So it's just important potentially not to necessarily sell the level, but to sell the next structure, and hopefully we'll get that good opportunity to get into it. Let me see. So moving on to the pound dollar, we can see this market extending lower and a nice pullback off this level in here. So let's go down into the smaller time frames. Kind of a double bottom as things stand, really, isn't it, on a 5-minute chart? And so clearly a bit of a band providing resistance. So there's our level. So an attempt to push higher, and then a couple of structural failures to the downside. And if we get a little break in this market, if we get a close beneath that level, we might look to get into it. It's a little bit choppy over the course of the morning, but this is a market in which we look to be selling. I just want to see the daily low. Excuse me, let me so the daily low for this market is 28.54, should I say. So 28.54. So this is the daily low just in here. So that represents the daily low. So clearly running into a little bit of resistance at the 1584. We're just pulling back a little bit. So we would like that structural failure. We'd like a floor to be created, and then a breakthrough, and then we can look to get into it. Just looking at the gold market, and I just want to see it again, the daily low. So yesterday's low was 1195.71. 1195, so roughly around, we're at this level right now, so that's interesting. Nice strong pullback to that level. So okay, we're at this level now. Do we get the next impulse to the downside? There's a bit of a now we're getting a bit of a reversal of that level, so we're probably seeing a bit of strength come in off these lows. This is the weekly low up here, the 1196.28, so this is clearly a little bit of a band. So let me explain what the plan is from a trade identification perspective. These are all trend related trades, so normally the probability of a successful outcome are increased if we look to sell these three markets. It's just looking for the opportunities to sell them. So what we'd like to see with each of these markets is a gathering of prices like this. This is fine, where we're failing to break to the upside and we create a structural low. Or if we refer to the pound dollar, if we get an attempt where we get a pullback which creates a bit of a low and we attempt to push higher and that fails, then this is effectively a structural failure. Then we could look at these levels to push lower. Same situation with this, we're looking for an M, effectively a double top, even on a minute time frame, and we can take this market to the downside because I think we are at the daily low, so we need some resistance kicking in around this level, and see if we can. Just the fact that it's pulling back is not the problem. The fact that these markets pull back is part and parcel of trading these markets. It's where do they pull back to, and if they pull back to weekly lows or daily lows, then that is potentially a good thing. It's kind of the levels that we'd be looking at to trade. So if you remember, there's a bit of a band here between the 28.56 and the 28.54, so we're effectively at the same level. Don't pay too much attention to this, but it's now how does price behave around these levels. If we get structural failures to the downside, we can get into them. If they break through these levels and start pushing higher collectively across the board, then more patience will be required in order to get into them properly. So we're wanting price to reject this level in here on a minute time frame, like we're seeing, or like we're potentially seeing. So we need to see these levels stack up. So if we get a move lower, that's fine. We'll allow it to do what it needs to do, and then if it makes an attempt and fails, then that is your high probability trade to the downside. So just a little bit of patience. The thing is about markets, you always get opportunities to get into them. So just allow the market to give you that opportunity clearly. And the reason why it's a structural failure is because we're getting this selling coming in now. But if the markets find a bit of support and hits that support, and if we start making obviously new trades higher, then a trade to the downside is then off the table, and you kind of want to avoid getting in to what is effectively the next leg to the upside. So let's see if we get So what we can do now is we can see the appetite to the downside, and that appetite is pretty strong. Nice explosive move, completely in 2 minutes, completely wiping out the bullish price action for probably 30-40 minutes. So that's obviously a good thing. Now what we want to see is a bit of a structure created. This is quite a long wick on a minute time frame. So we're getting that next impulse to the upside. So if this impulse breaks these highs, then what that means is that the markets are actually going to reverse. But so watching the gold market very carefully. If we break above these highs, then this is just a pullback, extending to the upside. So this is what I was talking about. This is the failure we'd like to see. So the high probability trade for us is if we get a break of this low. It's a little bit, it's about $1 lower. That's not necessarily a problem because we do expect this market to continue significantly lower below the 1996 level. If this price, makes a little floor at this level, this isn't really a problem for us either. There's plenty scope to the downside in both of these markets. So, and there's only sort of 11 pips range between the highs and the lows, except when you zoom in, it looks like, oh my God, we've missed a major move. When in actual fact, we would want to get our entry right as best we could so that we could be in it for maybe a 30, 40, 50 pip move, and at least give ourselves that opportunity if some price action starts to kick in. So so we're now below this level, so going to look to get into this pound dollar below the 28.45. If we do get a shot at getting into that, quite messy here as you can see, but we've struggled to break below that level. So what I'm going to do is I'm going to suggest if we get a close beneath this low in here, then I'll be happy to get into that to the downside as well. And finally, if we get a break below that level, happy to get into this market as well. So this would leave I guess a 10-12 pip stop loss in the euro dollar. If we get in at 28.43, there's about 15 pip stop loss in the pound, and so we just want to see the close of this level and the continuation, and then we're in. We're going to change this to our normal sort of trade size for the amount of capital we have available. So we know what trade size we're looking to trade straight away. So we do want to see this close at this level. So we'll just get into this market here. We'll 0.10. We'll get into this market as well. So let's place our stop loss. So we just have to wait for the next opportunity to get in to the downside in the gold market. Like, this is quite sort of messy swing, sort of a really strong flush lower and then a strong push higher, and then the next level lower. So we got in a bit lower than we would have liked, but we're quite happy to look to try and trade some of these markets for a period. So only 11 pips stop loss in the euro dollar and 13 pip in the pound dollar. So we'll just bide our time now with the gold market and see if we can get into that as well. Interesting to see if the gold market closes below the 1194. At the moment it's providing a little bit of support, so maybe we get a pullback and we can get back into it at maybe a slightly higher price now. So we're still trying to execute a trade in the gold market, but we're obviously in the euro dollar and the pound dollar. So we'd like to manage these trades further onto the downside. So quite happy to let these markets just tick over. Gold just hanging around this 194.77, so we're below our level, which is important. So let's see if we get a close at that level now. Still struggling to break beneath that level, isn't it? When you look at this, we've got the 1194. Each time it's attempted to break lower, and we've just kind of pulled off it. Let's see if we get the close now. $194. So let's just see if we get that close again. So now we've finally got the close. So now see, there we go. Let's get into that trade. Right, a small little taster trade. Very, very small size in the gold market. We're just placing our stop just above this level in here. The 1194.28. 30, and I'm just looking at the spread, so we can have a $1 spread in this market, so we can take note of the high, which is the 1196.33. Can put $1 just to the upside here. So that can just be 2 times the spread above this level. So now we're in these trades. We've taken 2 minimum size trades in the euro dollar and the pound dollar. Just taking a small little sample trade. We'll look to maybe add to this further lower if we get follow through to the downside. If we don't, we'll obviously we do have our levels back above here, above the weekly high. So it's got to work quite hard for us to be stopped out on this market. But our exposure to this trade is very, very minimal, and we might look to add to this as well very, very shortly. So let's look at the trade from a much bigger time frame. We can look at this high in here, the 128.57. We can push this just up a little bit for now. Just up to that level there, just clearing these highs. Now we've extended lower, so this is a really strong pullback. Created the break to get into the downside. But from a daily time frame, it's kind of a market that we do want to be in to the downside at these levels, and there's nice potential for this market to continue lower. So hopefully we'll have a profitable trade in this one. Getting a little bit of a pullback now, so we're looking for the next extension to the downside. So let's have a look at this one. So we're taking the high of this market, which is the 1584. So that's fine. So that's clearly above those highs. So we just want a bit of continuation to the downside. We've had the structural break to the downside now, which is exactly what we want to see. We've had prices pulled back to these levels. Obviously, in hindsight, a pullback trade could have been in the thinking. What we generally like to see is, I suppose this is a very, very mild attempt. It's a very, very shallow kind of structural failure. If we had a little bit more, something more to work with, then that would obviously be preferable. Getting the move to the downside now, so we want to break this low in here. That's what we would like to see next. And then what this does is creates a structure now, so we could actually look to bring down this much, mitigate this much risk if we get a little bit of break beneath this level. The only problem is we don't want to get too tight, especially if we're trading minute time frames. So on a daily time frame, when we look at this chart, we're just breaking these lows here, getting into it a little bit lower, but we'd expect continuation to the downside. We'll certainly be monitoring this for the next hour or so and see if we get this impulse move to the downside. If so, we'd look to stick with it. And the gold market, there's plenty of scope for this price to squeeze lower as well. Let's have a look at it. Of course, there's a correlation between these three markets because we're trading the dollar in all three of them. So we've just broken beneath the low, and with the expectation for this price it's been moving sideways for 6 trading days, and now hopefully we're getting a bit of the move, and hopefully again a little sizable move to the downside, and we might even look to add to this trade as well if we get that opportunity to do so. So we want to see prices break this low in here. And with the gold market, we want to see these prices break below the 1193 to the downside. So this move is very firmly based in dollar strength, and there's lots of signs to suggest that today we're going to get a strong day with the dollar. So we're looking for some high probability trades to sell, to buy the US dollar. So we've selected the euro dollar, the pound dollar, and the gold market because we think those are the markets that give us the higher probability trade setups. So we'll look to trade them. Good morning, Connor. Do we ever trade silver? In reality, no, not really. I mean, we can do. The only thing is, it's obviously heavily correlated with the gold market. So we've always just sort of tracked the gold market over and above silver. I suppose the trading the gold market is more coherent with the dollar, I guess. So I guess that's one of the major reasons why we just focus on the gold market more so. So yeah, that's what. Not really. Doesn't that go against what you are trading in the British pound and the euro? Stronger USD, as with gold, you are trading a weaker dollar. If we sell gold, we're trading a strong dollar. If we buy gold, because gold is a natural hedge with the US dollar, so it's inversely correlated. So what that means is, if the dollar strengthens, you're very likely to see. So this is quite strange, but you're very likely to see, if the dollar strengthens, you're very likely to see gold selling off. Which is effectively what you're seeing. So we're looking to sell all these three currencies, and what all of these three markets have in common is the quote currency is the dollar in all three, and we're suggesting that the dollar is going to strengthen. So we're expecting these markets, all three of them, to push lower. So the correlation is actually, it's inversely correlated. So dollar strength, you normally see the gold market, if it does move with its correlation, then you're very likely to see the gold market sell off. So does it go against what you're trading in the pound and the euro? No, these are trades that are supportive of each other. Now, we've always maintained that trading correlated markets is a danger if you don't know they're correlated. Like if you just happen to be trading these three markets independently and think that the euro dollar moves independently to the pound and the pound moves independently to the gold, and that there's no correlation between these markets, that's a very, very dangerous position to be in. Because as you noticed, we got into these three markets roughly at the same time. We could have got into the gold market a bit quicker, I guess, and a couple, maybe the pound market as well. But we're in these markets for a nice move lower. And we're getting that nice move in the pound dollar. Hopefully we'll get a little bit of turnaround at this level. So actually all of these three trades are supportive of each other. Yeah, look, I'll show you why, Connor. So look, the trade is quite a simple one, because when we look at the daily time frame, we can see the nice pullback to this level, to the descending line. A bit of sort of bearish momentum coming in, bit of a bearish engulfing candlestick there last week, and then sort of very little follow through until today. And today is now where we're trading the follow through to the downside. So we're looking to sell gold, and it's in keeping. So we're looking to buy the US dollar basically, and that's exactly the same case. We're looking to buy the US dollar against the euro and buy the US dollar against the pound. So we're getting a decent move now in the pound dollar. Hopefully we'll get the follow through. So actually a break beneath this low now in the euro dollar gives us a much better structure to look to mitigate risk, and we'd probably take off most of the risk on this trade if we get a break beneath the 1570 level, with the expectation for it to move lower. So we could do exactly the same with the pound dollar. And the gold market, hopefully we'll get that continuation lower, as you can see. So let's go into the 1 minute time frame. So if we get a break below the 11.93.92 level, then there's a couple of little structures in here. We could take away 60, 70, 80% of that risk in that trade. Yeah, no, not looking to buy. We're looking to obviously sell the gold market, just because of the structure and the follow through we're seeing to the downside. So yeah, from an analysis perspective, we want to be selling gold. So that's straightforward. It's just really focusing on the entries, and like I said, I probably got into it a little bit too late, but this sort of price difference between like a really primed entry and the entry we actually were able to secure is very, very little in real terms. The reason being is there's plenty of scope for this market to extend lower, certainly hopefully during the European session. So getting a bit of a bounce on the 5-minute chart off the lows, so that's not a problem. We would expect a pullback and hopefully capitalize on the next leg to the downside in these markets. So getting a little bit of a pullback across the board in these markets. So you want to try and see these rejections around the 15.76 level, in and around our entry price. If we can see rejections there, then it adds more reinforcement. So and we're likely to get a little bit more selling coming in. I don't know if you've noticed, but straight away you can start to feel the difference in kind of the volume in these markets. There's a little bit of a different feel to them. It looks like we could get some quite, you see like this, you get some activity, and that's what we want. We want to need the volatility to capitalize on the runs, and the way we trade these financial markets are conducive to getting into a market and then looking to capitalize on a nice explosive move. So if we get a break beneath this low, we can start mitigating risk on the trade. So let's say if we get a little, yeah, exactly, Connor. So really, that's exactly it. Larger number of participants, all focusing on price, and well, whatever particular strategy they adopt, they're all focusing on activity. So a lot of trading sessions over the last couple of weeks were a little bit on the painful side. Ironically, we got a lot of late day reversals in a lot of markets. Certainly we got a lot of moves in the latter part of the US trading session. So whatever the reasons for that, they were traded by a relatively fewer number of traders. So now we're getting the little bit of a move to the downside. So that's good. We want price to settle beneath these lows. We're getting follow through in the pound, and we should see a little bit of follow through in the gold, but obviously it's on a go slow right now. Guys, can I just see if our stream is okay? Okay, good for now. Sorry about that. I don't quite know what the problem was or is. Let me see if I can refresh things on my end. And it's working again now. Okay, guys. A bit strange, but I'm just going to refresh things on our side. So we're getting some nice strong moves now to the downside. Hello Cliff, welcome. Okay, so now we're getting closer to the moves that we're looking for. So what we can do now is we don't need to mitigate all the risk in these trades. So this is the trade management part of it, which is very, very important. So trade selection, we use multi-time frame analysis. We were able to identify the high probability trading opportunities, and then we went into the execution. Now we probably could have got slightly better execution today on all three trades, but ever so marginally, nothing of any major concern. So we can definitely sharpen up as far as the execution part is concerned. We could have had favorable price action around these levels, which would have made it a little bit easier, but obviously we just hit it and literally bounced off it quite considerably. So then we had to sort of bide our time and be nice and patient. So what we have now is we have our stop loss where things currently are. We have the potential to mitigate risk, so we're going to look to take that on a consistent basis, manage these trades effectively, and take risk off the table as this market is moving in our favor to the downside. So the high is, we can zoom in a little bit more. So the high of this candlestick is the 1576, and we'll just add 2 pips to the upside. So 1578. So we've literally taken most of the risk off this table. We're only exposing 3 pips now in the euro dollar, which is obviously a good position to be in. We're virtually risk free on that, and we're virtually risk free as well on the pound dollar. So so what we want to do is take note of the high, which is the 28.44, and this is active sort of management really of your trades. 44, so we can take it up to the 46 level. So 28.46, so we can just keep it in here. And now we're looking to trade structure as this market moves in our favor to the downside. So currently in a couple of good trades there. And finally, we're getting the follow through from the gold market, and we'd expect this market to tick lower as well. Okay, we're back. Yeah, no, we had a couple of issues, I think, with just our stream for whatever reason, just for, I don't know, maybe a minute or so. Everything seems fine now and we're back to full health. So, so Tony, you're very welcome to join us. Are you new to trading, or do you have a bit of experience? Do let us know if you can locate your chat box. And where are you joining us from? Perhaps would be obviously interesting to know. Okay, so now obviously pullbacks are part and parcel of trading these financial markets. So we're going to have to experience the pullbacks. You know, if you're ready for them psychologically, you're not constantly on edge about the trade. Allow the pullbacks to develop. All we're literally doing is to trade the structures, and we look to take off the bit of risk that we have when we trade, when we get that opportunity to do it. So we know we're going to get a pullback. You know, what we would like to see for the health of the trade is a pullback to the 1570 level, and maybe even give us an opportunity to continue to sell it. Similar situation, you know, a nice strong pullback to these previous levels might even give us an opportunity to sell it from that level as well. So it's interesting to see that the gold market has really struggled to break below the 1193. Still plenty of time. We're not going to be moving or changing any. We're going to leave our exposure in this market as it is for now. So we want to let the market just do what it's going to do. We're going to then look to capitalize, and experiencing the pullback is part and parcel. So really we want this market to extend and make new lows below the 1562 in the euro dollar and the 28.24 level in the pound dollar. And we still need the gold market to break the 1193. So a bit of resistance coming in, a bit of buying pressure coming into the gold market. We do have our risk very, very low on the gold, just to take off a bit of risk on that. So we're getting in it for price action purposes and seeing if we can capitalize on a bit of a move. We're going to ease our way in effectively to trading these markets. We're off the back of summer markets, and you know, traders are coming to their desk. You can almost feel the volatility just re-enter the markets literally straight away. Yesterday was a bank holiday in the US and Canada, so it felt like summer markets all day yesterday really. Only a couple of moves which we saw in the pound dollar and the pound yen. We're able to get into them. We managed the trades effectively. We saw a large, long, late day reversal, booked in a small bit of profit. It was a bit of a shame because there were two quite good profitable trades. But sometimes you just don't get the price action that corresponds with the trade. So the idea and the analysis was correct. The execution was fine. The trade management was fine. We actually mitigated risk. So we got ourselves into a position where we were looking to book in profit. So everything was fine, just apart from the outcome really, which was the really strong pullback. We were hoping to stay into it going into the US Open, and we didn't really get that opportunity to do that. So it's really nice to feel sort of the benefit of trading volatile markets again. We know with volume, that's what this now feels like. So I'm personally quite excited about the opportunities that are going to unfold. Tony, you say, thanks, you have a good experience, but trading is a lonely business. It absolutely is a very, very lonely business. That's one of the key, I suppose, ingredients that we want to make available, because it doesn't have to be a very, very lonely experience. But you're right, it is most people's experience. And to be fair, for the reality with this industry is that it's very, very lucrative, but it's only lucrative to a relatively small number of people who know how to trade these markets properly. And accessing that mentorship, like for me personally, was profoundly important. We've packaged the whole LiveTradeRoom behind offering traders real live trade rooms to experience, to join in, to look for the opportunities together. We have traders, you know, suggesting all sorts of different markets. We look at a whole variety of different markets, and we've got a very clean-cut view in terms of trading price action. So we're technical traders. We know what type of traders we are, and it's really our approach or our angle on things that might just make things, will enable you to just understand things a little bit better. But you're absolutely right. Trading can be a very, very lonely experience for traders. Hopefully we'll get another flush to the downside in these markets, especially the gold market. I'm looking very carefully at that. We want to see a break below the 1193. We're getting close to making a new low So now we're getting that. So we want to close below that level. Same with the gold market. So hopefully we're in a number of really nice profitable trades. Just want this gold market now to follow the pound to just follow suit. So you just see live trading channels and you like our one. So that's great. You're very, very welcome to join us every day. So we're online at 8 a.m. UK time, and again at 1 p.m. every day. So we're trading these markets live. And you'll get used to myself, Tasso and James over the coming weeks and months. So we're getting some good follow through now across some of these markets, and you can just really feel the volatility in them. It's so difficult to trade summer markets, whereas what we can do is every day now, every morning session and afternoon session, look to get into these markets, make some money. And look to get out of them. And we won't have winning days every day. It's not the nature of trading these financial markets. So if you want an experience, or if you believe you can trade these markets without taking losing trades, it's just not possible. So prepare yourself for losing trades. But what we do is we keep those losing trades very, very low and very small from a monetary perspective. We look to manage our trades effectively. So protecting your capital is probably the most important skill you can learn when trading. So most people focus on their profits and how much they're going to make, when in actual fact, if you speak to profitable traders, the one thing they all have in common is an acute awareness of protecting their own capital and not exposing their capital where they can suffer drawdowns, significant percentage drawdowns or margin calls and things like that. So if you can avoid those situations when you trade, which is what you'll experience here at the Live Trade Room, it'll make a profound difference to your ability to make consistent returns. Now, again, we scratch our heads when we look online and we see a lot of these trading rooms, and they go on about making £10,000 in 30 minutes and all that kind of stuff. Now, they miss out huge sections of real trading. So I saw one video, the guy got into, I think, 9 or 10 trades, where at the same time he took all the 9 trades at the same time with significant size, which meant I think it was $1 a pip movement, and if he just exposed 100 pips in those trades, I think his exposure to the downside, if I remember rightly, would have been about 15 grand. It might have been a lot more than that, if I remember it rightly. So the market went in his favor, and he was able to tell everyone online, how great he is at trading. But I don't know about you, but most people are not in a position to risk 15 grand for every 100 pip that goes against him. So that is high risk, high reward trading. Now, we're much more advocates of real trading for people that we have a modest account balance. So we actually, the capital we have to trade these financial markets is kind of the average deposit. So it's more real. You can effectively trade and manage these trades effectively, and you allow you become a bit of a master of price action, which I suppose some of the benefits of that is that you can navigate all sorts of different market conditions, but the realism of trading, depending on who you speak to, seems to have gone out the window completely. And the problem is it kind of sucks people in, because people are obviously want to have the all the good things that can come with learning how to trade, but they don't necessarily want to learn how to trade. They prefer to be impressed with someone driving around in a Lamborghini. So I don't know how that helps people learn how to trade. So I know they want to sell really expensive training and things like that, and there's no need to be spending large amounts of cash. I've just realised something. I've got traders over at the LiveTradeRoom, which I do need to switch across for. So let me just fly through these. Right, great, Tony. So you've decided to stay here. We'll be delighted to have you join us every day. Yeah, great, Connor. Thanks for that. Also, Chris, very welcome to join us. Perhaps are you new to joining us as well? Perhaps you'd let me know. Do you have two trade rooms? This one and another one which calls specific trades? Yes, we do. So we'll be trading again through YouTube live at 1 p.m. Now there's no cost to charge for that. It's currently something that we're making available. We're sort of building our YouTube channel. However, it's probably a good time to suggest, please do read the description below. We have more live trade rooms beyond these two free sessions effectively during YouTube. So what we're going to be doing now is switching over to the live trade room. We've got our traders there that trade with us every day. And if you are interested if you're serious about learning how to trade and you like our approach, and we trade structure, and we're technical traders focusing on price action, looking at support and resistance, and obviously Japanese candlesticks, and just navigating markets, and looking to make consistent returns. I suppose if that is in keeping with what you're looking to do, sort of genuinely learning the skills needed to trade, then please do come and join us. We're currently offering a 2-week free trial. So if you click on the link, do sign up. You can taste. We have a live trade room every evening, which is based around capital growth. So not everyone is available during the day. So trading the markets in the evening for 30 minutes at 9 p.m. every evening, where we trade daily time frames. It's a slightly different angle on trading these markets, but gives you a really interesting exposure to big market moves. And it's kind of, the focus of it is all based around multi-time frame analysis. So very, very interesting, very, very strong learning curve. And we're sure you'll enjoy what we have to offer. So if you would like to join us over at the Live Trade Room, we're not interested in sort of charging big fees. You can join all of our live trade rooms for $9.99 a month, and all that does is enable you to access, I think, over 76 live trade rooms in a month. So it's really just a contribution towards the cost and the infrastructure for that. And it is $9.99. There's no strings, there's no contract, there's cancel anytime. There is no we don't want there to be any barriers for you to be able to join us. And what you'll experience from us is kind of a genuine education, and we don't want fees to be an issue for you. So if you're happy to contribute $9.99 per calendar month, we'd be delighted for you to join us, and hopefully you will find that a little bit of a no-brainer if you do want to learn how to trade these markets effectively. And don't forget, trading the financial markets is a skill for life. It's something that's profoundly important, and those that make consistent returns always make consistent returns. Okay, they might have drawdowns, they might have significant periods where trading conditions are particularly tough, but if you look at anyone's equity curve, it goes up and down. It has to experience drawdowns. So we don't panic about that. We just make consistent returns. We approach these markets in a consistent manner. And we really do pride ourselves on teaching traders, really a strong skill set. So yeah, do click on the link below. And if you want a 2-week free trial, access, the back end and all the education we have available for you, which is quite extensive, all designed specifically to obviously give you a really strong education. Plus we're live literally all day, every day, so you have plenty of opportunities to speak with our traders and really get a strong sort of understanding about how to trade. So yeah, Chris, we do have 2 day trading live trade rooms every day. This one and another one at 1 p.m. So we're live from 8 a.m. and 1 p.m. Now, after the first hour, we do switch across to the live trade room. So that's why if you have access and you have the membership, then do take advantage. And like I said, you get 2 weeks free. So there's no cost of any kind. Tim, do you have targets set? I'll just move stops and structures and just follow till it stops you out. Yeah, we'll look at take profits really. Perhaps when we switch across to the live trade room, there still feels, I'm sure you're feeling it yourself and you're probably seeing it on the screen, there's still a really strong biasness to the downside. So we kind of actually want to go with it and just see if that momentum changes and shifts. If so, we will definitely look at take profits now pretty shortly, but we want to see continuation, see if all these markets continue to roll and actually move with it just right now, Connor, if that makes sense. But look, we'll have a look at take profits now when we switch across to the live trade room. Morning, Ian. Good to have you with us. Sorry for being late. You were waiting for afternoon link to start. No problem. Yeah, hopefully you can join us next time with the morning link. So Tony, you just said, yes, you are good at talking well visualized charts, not too overburdened with stuff, clean webinars in live. Yeah, absolutely. We want to see what price is doing. Yes, we do have sort of horizontal levels in here, but really, if we can't see what's going on with price action, then we might as well pack up. So we do want to see truly what's going on. We don't want to clutter our charts with lots of often unnecessary indicators, which we know there's lots of traders that do like to package their approach just so that you can spend an awful lot of money on their approach. But raw price action, if you can understand that, you'll be able to trade, and not be so reliant on an indicator. And that has its ups and downs. Some indicators could be useful from time to time. Others can really detract from what's truly happening. So just become a master of price action, as you can see on the right hand side of your screen. So yeah, please join it, Tony. Plus you trade everything, which is good. Yeah, we do trade foreign exchange, commodities, even the indices. We're just backing off the indices, just short term actually at the moment, but you'll see we'll be trading those as well. So any market with a price chart we can trade effectively. So that's exactly what we're going to do. We're going to trade the markets properly. So you're going to try and join us as often as you can. Fantastic, Tony. You're all very, very welcome. So anyone that's new to joining us, we will hopefully look forward to seeing you soon. And like I said, do read the description below. And if you do like to join us over the live trade room, we do need to switch across. I'm running very, very late this evening. I do apologise. And we'll look forward to seeing you all hopefully again next time. So for everyone here at the live trade room, take care and we'll speak to you soon. Bye for now.